Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve, and here's some of the trends we're going to be diving into. Trade talks between the U.S. and China have left some unanswered questions, but Wall Street still liked what it heard. Stocks got a little bump on the first trading day of the week, and it was still mixed, with the S&P and the Nasdaq ending up. The Dow slid, ending the day down for the session. Is the market right for more companies to go public? We're looking at recent optimism around new IPOs following a bit of a slump in listings amid market volatility. And speaking of volatility, where are retail investors putting their money right now? What are they most worried about? We're taking a deep dive into some important and surprising trends in personal portfolios and investments. Well, the IPO market has seen a layer of anxiety amid elevated uncertainty from Trump's tariffs, with companies such as StubHub and Klarna showing pause in going public. However, even as tariff worries linger, the IPO market is seeing a glimmer of light. The number of new listings as of June 5th, the highest since 2021. This is according to Renaissance Capital. But what lies ahead for the public market? Rainmaker Securities Managing Director, that would be Greg Martin, joins us now to discuss. Greg, great to see you as always. So the IPO market, Greg, signs of life there. We were talking off camera. It's got Circle, CoreWeave keeps making headlines for the right reasons. What do you see ahead? How bullish are you, Greg? And what variables does that depend on?
Well, Josh, thank you for having me. Good to see you again. I mean, clearly we've had a resurgence. Remember, we thought the IPO market was going to reopen at the beginning of April. We had, as you point out, we had the filings of Klarna, we had StubHub. They had to pull because of the Trump tariffs, and now all of a sudden we have a little bit of IPO craziness again. As you point out, Circle is on fire, CoreWeave is ripping. We saw Amada Health go out. We're going to see Chime this week. I expect we're going to see a whole raft of new filings, and I think people are excited for sure. Clearly, these IPOs have performed extremely well in the aftermarket, but there's also an air of caution because there's a concern that the window could close. Obviously, there's some uncertainty around tariffs. There's still some economic uncertainty. So I think there's a little bit of a window opening, and I expect we're going to see a lot of people try and get through that window in this period because there is a concern that it will close. And so I think we're going to see a raft of filings. We're seeing it, as you point out, with the Renaissance report. But it's still a little bit uncertain as to how long that window is going to be open. So I take a cautious optimism.
All right, cautious optimism. Let me ask you this. Is it a good time, Greg, for anyone and everyone to go public? Or is it more specifically, it's a good time to go public if you've got an AI/crypto story to tell?
Well, clearly, if you have a good story to tell, I think it's a good time to go public. We're seeing a lot of crypto companies. Obviously, Bitcoin has traded up substantially. So we see Circle, we see eToro, we see Gemini, most likely going public soon. Definitely anything AI. CoreWeave's a great example. They're an AI infrastructure company. The company's up 4x since its IPO in late February. So I think there are good stories out there, but we're also seeing a lot of fintech companies go public. I expect to see Klarna, I expect to see Chime. They're not necessarily AI plays. So I think the truth is there's a lot of great companies that have been private for a long time that have been waiting for an opening. So I think we're going to see those too. And then of course we saw digital health companies go public. We saw Hinge Health and Amado Health go public. So I don't think it's just AI and crypto. I think it's just a window that's open, and the market has shown a good receptivity to new issuances, and that's a good sign for new IPOs.
When you look at the pipeline right now, Greg, I'm just curious, what does the financial profile of those companies look like? I mean, do you see more companies, they're profitable, or at least they have a good story to tell about a path to profitability?
You know, I think profitability is more important at this point.
Why, Greg?
Because I think people are worried that if there's some kind of an economic uncertainty, that companies that are profitable can sort of weather a storm a little bit. I think people are looking for scale, stable revenues with some sort of predictability. So I think people will be worried about the really hot growth stories that are spending too much money, because I think people are worried that if there's a bad environment, which it's not certain, we still have a pretty high percentage possibility of an economic recession going forward. So people want to see companies that can grow, but can grow profitably and have good unit economics.
If it hadn't been, Greg, for the Trump tariffs and the uncertainty that did cause, do you think the IPO market would be even more robust than we're seeing now?
100%. I think people entered this year thinking that the new administration was going to lower taxes, we're going to have a better regulatory environment, that the market was going to be very receptive to this very pro-business administration. The tariffs were a huge wet blanket, and it's created a lot of uncertainty. And if you think about IPOs, they're new issuances. They're inherently uncertain. And so I think the companies that can give people a better sense of predictability and stability, which profitability is often a metric for, are going to fare much better than companies that feel a little bit potential flash in the pan. But I think the tariffs still create that air of uncertainty that is going to mitigate, what feels like a really good environment to go public.
Are there certain companies on your radar, Greg, where you say, keep your eyes open? These could be some of the names that are willing to test the public markets.
Yeah, so we always watch the granddaddy companies, whether it's Databricks or Stripe. These are 100 billion market cap companies that historically would have been public already. You layer in companies like ByteDance and SpaceX or Starlink, which are $300 billion companies, and then you have these hot AI companies like OpenAI, which is a $300 billion company, xAI, Anthropic. So those are the companies I get excited about because those could be tens of billions of IPO, which will really move the IPO market. And then you have I would say the scale steady fintech companies like Chime, which we're going to see this week. That's going to be probably a $10 to $20 billion market cap company. Klarna, which I expect to refile, will be in that range, and maybe Revolut, which is more like the $50 billion company. So there's a lot of great private companies that historically would have been public already. So I watch when those companies will go public. That will be a good barometer.
I'm just curious, Greg, final question. In your world, how much interest still is there in that mega trend of AI? I mean, is it as much as if I asked you 6 months ago or 12 months ago?
I mean, it hasn't cooled down, if that's your question. There's still intense interest in those types of companies. Everything is AI. People go to bed and they wake up in the morning, think about AI. How is AI going to impact my business? How is it going to impact the investments I make? And if a company does not have an AI angle or an AI story, there's almost no interest in it. In fact, when you look at the S1s and the filings and what the CEOs of even these new companies are talking about before they go public, even if they weren't sort of necessarily in the AI category, they're talking about how AI is impacting their business. Klarna is a great example. Klarna is a fintech company, but they're talking about how AI is reducing the cost of delivering their services. So I would say it's still incredibly prevalent, and companies that can really, we just saw ChatGPT announce that they're doing 10 billion of annual recurring revenue. This is a company that had zero revenue at the beginning of 2023.
Yeah.
So there's such immense growth. It's such a disruptive technology that I think everybody is talking about it. And if you're an investor, you have to be focused on some kind of an AI story in your investments.
Greg, it is always great to see you, especially on set. Thank you, sir.
Good to see you.
Well, the S&P 500 and Nasdaq closing the day higher amid optimism over trade talks between the U.S. and China. And Yahoo Finance's Jared Blickery joins us now with the trading day takeaways. Jared.
Thank you, Josh. We got to start with the small caps because the majors didn't do a whole lot today, but the small caps have been soaring the last 2 days, and we've got a bit of a breakout that I want to chart for you. I'm going to start with the Russell 2000 here. This is a 2-day look, and you can see it's up 2.25%. And here is a year-to-date chart. And you can see here, I've been drawing this for a number of days, and we have an inverse head and shoulder pattern right here. So we've just broken above, and just based on the measured move, we could travel this distance here, and that might take us, let's see, let's go to the 6-year chart. And yeah, that could very well take us to a new record. So we'll have to see if that comes about. We need a catalyst, but nevertheless, that's what I'm looking for. Also, just before we go, I wanted to show what was happening in ARK Innovation Fund, because speaking of small caps, and this is a fund that has a lot of small cap members, or to mid cap too, that has been up 10.73% over the last 2 days. Here is a year-to-date look, and you can see it is broken out of this consolidation too. We've seen a number of breakouts. These just happen to be the latest that we've seen over the last few weeks, and maybe some to go.
I bet some viewers are wondering, Jared, and we've been asking strategists on the show today, what is the next big potential catalyst for this market? You say what?
Hard data on deck. We're looking for CPI, and I did a segment with this chart earlier today, so I'm going to break it down real quickly, but you can look for that segment on yahoofinance.com. This chart goes all the way back to the beginning of the bull market, 10 of 22, so October of 2022. I'm looking at the green line here, and this stair step just tracks the market reaction to CPI. And you can see here, the white line, by the way, is the S&P 500. And then right around the tariff trouble that we had in April, we had a huge drop. And I think it was just exacerbated by all the uncertainty. But I think it's going to be really interesting to track whatever happens this Wednesday. And potentially, CPI has been a big market leader. And we'll have to see if that is a leader again to the upside or the downside. Also want to mention that I had the chance to sit down with Sam Rowe today, and this is an episode of Stocks in Translation that breaks tomorrow, and we are talking about the hard data versus the soft data. Let's take a listen.
There's different ways to measure, value in your lives or happiness and all this kind of stuff. But from an investor standpoint, things tend to gravitate back toward those fundamentals, and those fundamentals are driven by what people actually do and what businesses actually do. And for now, at least, businesses are actually still investing in their businesses and consumers are still going shopping.
So it seems there's lots of complaints and lots of uncertainty, but nevertheless, the hard data is still showing there's a lot of strong things happening in the U.S. economy.
What other markets on the Jared Blickery radar right now?
Guess what I'm going to put up there?
Yes.
Bitcoin, the double bluff. And I got to chart this one because I've been saying for a long time that Bitcoin is famous for its fake outs, both to the upside and to the downside. And it seems we might have had a few fake outs recently. So that has to do with the double bluff comment that I was just making. Here is the year-to-date chart. So here are the old record highs. We just broke to new records right here, and then it looked like we had a breakdown here. And so I was calling this a fake break to the upside, but now we have surged right back into this old trading range, and so this is looking like a false breakdown. I think it's an easy bet that we get back to these record highs now, because check out the price action over, let's do the last 4 days. This will cover the weekend too, up 6.71%. So that's pretty good. But I haven't seen the most participation from some of the other markets. I'm going to show you the 1 month in our whole heat map here. If I show you the equal weighted view, we don't have a lot of leadership. And leadership is something that I want to see a lot, and breadth is something I want to see with some of the other coins. And just real quickly, here is Ethereum. I'm going to show you the year to date on Ethereum. We've had a nice couple days, but Ethereum's still stuck in a range. So until some major catalyst kind of propels everything up, I think Bitcoin is just going to kind of meander around record highs, and I wouldn't get too excited about it just yet, but we'll have to see.
So you're saying a fake out followed by a fake out?
Yeah, why not?
Yeah, I like that. Thank you, Joe.
You got it.
Appreciate it. Stick around. Much more Ask for a Trend still to come. A recent Charles Schwab client survey showed that retail investors are concerned over the latest shifts in trade policy, with 60% of clients expecting equity volatility to return this summer. For more, let's welcome in now Joe Mazzola, Charles Schwab Head of Trading and Derivatives Strategist. Joe, it's always great to see you on the show. So maybe start there, Joe, big picture, because I know you survey those Schwab customers and you want to get a sense of how they're feeling. When it does come to client sentiment, Joe, what are you hearing?
Yeah, so there's two. There's the behavioral, which is what they're doing, and the attitudinal, which is what they're saying. So let's start with that. So basically on the attitudinal side, what we're hearing is a little bit less bearishness than what we saw in April. And that makes sense kind of given the bounce back that we've seen. But there is a little bit of trepidation around, the next couple months in terms of tariff and trade policy. One thing that was interesting, Josh, was fixed income volatility was something that they called out is kind of, they're worried about how that would make its way into the equity markets, just volatility as a whole. But I thought it interesting to hear them specifically call out fixed income volatility, and they're just curious as to see kind of what that it will do for their investments. And they are trading around some of that tariff and trade policy as well too. I mean, we got a month to go before we kind of figure out where we're at in terms of any deals getting done. So I think they're just getting ready to kind of be able to react should something come out.
And among those Schwab clients, Joe, are there generational differences to call out in terms of how they're feeling now and what they see ahead?
Yeah, there have been, and specifically now, which you tend to see is Gen X and older have been a little bit better, kind of holding on to positions. You've seen a little bit more activity, with some of the younger generations, the millennials and Gen Zs, where they're kind of trading in and out. So I think that's something that we've seen. There's also been, what's interesting is we've seen a lot of rotation out of some of the higher beta names, and I thought this was particularly interesting because last time I talked to you, when we saw the April stacks, we had that drop, but there was a good amount of buying on April 8th and April 9th, kind of where that bottom was forming. And a lot of that had to do with some of the tech names, NVIDIA being number one, and you saw that kind of making its way through the rest of the Mag 7. But what we tended to see in May was a little bit different. We after that rally had kind of gotten us back to close to all-time highs, we started to see a lot of moving out of some of the higher beta names. Information technology, communication services, those are the two biggest net outflows in terms of sectors. And shockingly enough, healthcare was the biggest inflow, and the one stock that kind of garnered the most dollar inflows was United Healthcare. So Palantir was number one on the buy list. United Healthcare was number two on the buy list. I don't think I've ever seen that, United Healthcare being even top 10, and then Amazon was number 3.
Are they mostly buying individual tickers, Joe? What about ETFs?
So that's another interesting point, Josh. This is something that we've really started to see, I want to say probably since the end of December, where there's been this rotation away from some of the idiosyncratic buying, idiosyncratic risk of owning individual names, and more into ETFs. I think that is something that really started to kind of take shape at the end of the year, but is even becoming more and more prevalent as you're starting to see, the volatility in the markets. Yes, we hit a 60 VIX back in April, and I think what happened is, people are saying, oh, let's rotate maybe out of some of the individual stock picking and get a little bit more into broader diversification. And you've seen that through the ETFs. You also saw a good amount of fixed income buying in May as well, too, which is interesting because this is where you have to look to what they're doing versus what they're saying, because they're saying they're concerned about bond volatility, but at the same time we saw a lot of flows into the fixed income market, specifically treasuries.
What about margin balances, Joe? I know we touched on that last time we chatted.
Yeah.
Any update there? Trends to watch?
Yeah, no, those are coming down, and a lot of that has to do with just the fact that you're seeing the market bounce, right? So once that starts to happen, you see a lot of those margin balances kind of free up. The other thing that's interesting, Josh, is on the option side, you're still seeing a lot of premium selling. And I think probably a lot of that has to do with the fact that premium buyers just haven't been rewarded, right? You go from a 60 down to a 16 handle in the VIX, and it's hard to own that premium. Now, I will say this, and this is where I think this is different than maybe kind of what we've seen in the past, where we've had these big moves. I was looking back at kind of client activity in June of 2024, where you saw a lot of upside buying on stock, but you saw a lot of upside buying on calls. It's different right now. You're not seeing much in terms of hedging, and you're not seeing much in terms of that upside buying. You're kind of seeing clients just kind of wait it out a little bit. They're trading more around kind of the at the monies and just more kind of in and out as opposed to taking positions. And I think a lot of that just happens or, has to do with some of the indecision and some of the volatility that could be coming out in the next month. It's hard. Like I said, it's hard being long volatility because it hasn't worked for the hedgers, but it's also kind of hard being short volatility as you're kind of getting around some of these exogenous moves that could occur.
Finally, Joe, I heard you mention the names folks are buying. I'm just curious, what are some of the tickers that made the list in terms of what they're selling?
This was a shocker, Josh. NVIDIA, number one.
Wow,
I don't think I've seen that in the 2.5 years that I've been looking at this, because that has been a retail darling. It really has. There was 1 month where it was number one on the sell list, but it also happened to coincide with number one on the buy list, so it kind of netted each other out. This was the first time that I have seen it be number one on the sell list, and it just happened to kind of coincide with earnings. So right after earnings came out, investors use that, or our clients use that as a way to trim, I think, into some of that strength. You saw the same thing in Microsoft. You saw the same thing in Meta. I think they probably might have missed the boat a little bit because Microsoft and Meta have both continued to move up since then. But those are the three that top the list.
Interesting. Joe, it's always great to see you and to have you on the show. Thank you, sir.
Thank you.
Stick around. Much more Ash for a Trend still to come.
In today's chart of the day, we are keeping it straightforward. We are once again approaching the record high for the S&P 500. To see just how close, that's what I wanted to illustrate here today. So here we're just looking at a very straightforward year-to-date chart of the S&P 500. We're up a little bit on the year, but really not much changed. What's important here is the clawback that we have seen from the depths here where we saw tariff-related losses. And because, as many investors have said to us, the worst case scenario of the most onerous, the highest tariffs on our trading partners. It seems as though that worst case has been removed, at least for now. That is what has allowed stocks to rally from here. So here was the record high for the S&P 500. That was back on February 19th specifically. Since then to today, we see about a 2.25% decline. So we're about 2.25% from that record high level. And many of the investors, strategists that we've been speaking with, even as recently as today, have said they are optimistic we could push higher from here. It's going to depend on things like getting those trade deals further down the line, seeing what happens with the tax bill that is making its way through Congress, and what does the Fed do next? Is it indeed going to cut rates once or twice before the end of the year? So those are the various things that investors are watching most closely here. In terms of where strategists are for year end for the S&P 500, there is a wide dispersion that has remained in place really throughout the year. Wells Fargo at 7,000. I don't even know where that would be on this chart, somewhere up there. And then the lowest estimate on the street is with Stifel Nicolaus. That's at 5,500, so around here or so. So very broad range of outcomes. If you look at the median of those outcomes, you get 6,100, which is just a little bit above where we are today, and obviously would imply a new record for the average. So what's interesting about that 6,100, that median, is that since we saw the sort of tariff pause with China, many of those forecasts have been increased. The likes of Ed Yardeni at Yardeni Research, Goldman Sachs, Deutsche Bank, Citi, and Barclays have been raising their forecasts. Remember, many of them cut as we saw those worst case scenarios being baked in, and then they raised when it looked like that was removed. But when we're talking what to watch here, 61.4415, that was the closing record on February 19th. That is the next number to watch, Josh.
Thank you, Julie. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.